Hey guys, Lil Dube. Thank you for joining me on the 4th episode of our Traders Journal. So week in, week out from last day, we've been sending this market preparation, which now we call our Traders Journal, just to give you an insight of what we will be looking at the coming week. Now, as I try to take a break and detach myself from these videos, I kind of thought that maybe the way we're going about making this market preparation, it's kind of hard for someone who's new in Forex to be able to understand. Even if someone's not really new, but for someone who hasn't had enough or more than 50 hours in Forex, wouldn't really be able to comprehend what we are talking about, all the Fibonacci's, all the ABCD levels, and all the stochastics, and all this other stuff that we add. Now, I thought for this week I could try to make it a little bit simple for everyone, even those who are not that experienced in Forex, to be able to understand what it is that I'm talking about. Instead of just having shortcuts and showing you, okay, my Fibonacci says that, RSI says that, ABCD pattern says that, because for someone who's been in the market long enough, without just opening the chart, you know which direction you're looking to go. Now, for someone who's new, that is all foreign to them. How ironic, foreign exchange market was foreign to them. But nonetheless, like I said, it's kind of foreign to them. For today, bear with me if you are way advanced and feel like this is just baby stuff. I'm taking you back. But I want to make it a little bit simple for everyone, who, even someone who's new to Forex, can have an idea on what it is that I'm showing right here on this chart. Now, I always perform my trading using a trade time frames approach, meaning you use three different time frames to analyze the market. And for today, we'll be using the daily. On the daily chart, we just want the direction of the market. Now, as you can see, using my 4-hour, price action is an overall uptrend. It's going up. It's visible to everyone. Now, if you don't know that the market is going up, and how do I know that? Okay, I won't go into that. But it's pretty evident to the majority of us that price action is in an uptrend. Okay, now we'll start by analyzing this move. This uptrend, because this, so we have a visible solid push to the upside. Okay, so from this level of structure, price action gave us a push, and up to this point it gave us a bit of a retracement. Now, seeing that price action gave us a bit of a retracement, look at this overall move. If you compare this retracement to this overall move, how much of an impact did it make? Did it go 50% against this move, 10%, or 100% back at this level of structure? Now we could see that sellers came in just 10%, meaning out of 100% of buyers that came into the market, only 10% of sellers came into against that move. So at this point, sellers are not really aggressive. Sellers are not really threatening to the buyers at this point of time. They couldn't even cause anything to the market. Price action continues to the upside, giving us a break above, close above. This is a sign of a trend continuation on the upside, a valid uptrend, and price action continues up. Now, something significant that we see at this point of time, unlike at this level of structure, now we see a bit of a pause on price action. Price action hit this level of structure, got it done, and give us a bit of a consolidation. Let's grab this. Now, why did sellers stop at this level of structure, or what caused buyers to have a pause? Let's grab another tool and put it right here, and let's look left. What was so significant that caused a pause on the buyers? Now we see, as we look left, just right around this level, there was a significant structure level. There was a nice resistance. So this is what gave us a bit of a pause at this level of structure. Okay, because resistance acts as a stop for when buyers push up. Now, because we have a resistance, this one thing that causes there are a lot of sellers waiting at this point to push price action to the downside. Another thing that gives sellers more weight is that a lot of people who have joined this move will be looking to take their profits back at this level of structure, because looking left we saw there was a resistance level, no? But a significant thing that we see is that we had a break above, close above this level of structure. This line is so we had a resistance, but buyers pushed up and gave us a break above, close above. And here at FX Link, whenever we see a break above, close above, we think trend continuation, continue with the prevailing trend. If we see a break above, close above on this case, now we're thinking continue to buy. Now we had a bit of a pause, a bit of a struggle between buyers and sellers, and it continued for a couple of hours or a day or two. What happens at this point? There are always going to be those people who think the market needs to go down at some point, and those are the sellers. Now there are those emotional buyers who think, nah, I missed this move, definitely I'm joining. Now they were right. Question is, was their timing right? Now let's look at something. As we see a lot of pauses at this level of structure, where do you think most buyers who see this struggle want to enter the market? Most of the buyers will be looking to enter the market at this level of structure. A lot of buyers who missed the move will be looking to having their buy opportunity back at the support levels. No? But there are also sellers who believe that this is a significant level for them to sell the market. This is what causes this massive consolidation. It's not a massive, but that's what causes this consolidation. Now what happens? Like we said, we noticed a break above, close above, so we're still looking to buy. The market needs money to move, and that's what a popular word in Forex is called the money makers, or the market makers, people who are always against you, looking to take your money. So like I said, most of the buyers who were waiting at this level of structure, look what the market does. Price action will push up, push down from this level, which is considered as sellers coming up to this level of structure. And what happens? Everyone who had their entries over here would of course have their stops 5 pips below, and the market makers will come in, collect their stop losses, generate money in the market. Now these buyers are out of the market, and price action will continue up. And what happens as it goes up? There are people looking to sell. It will trigger their sell positions, push up, and collect their stop losses. It took stops on this side, it took stops on this side. The market is liquidated, has enough money. Now price action can continue to move up. And from there, we have a bit of a slowdown. This level of structure, but it wasn't a pullback. It was just a bit of a minor slowdown. Price action continues to this level of structure, and we get another retracement right here. Now, because we had a bit of a slowdown, so we have to start the move from this level to this level, and you can see that we had a pullback. How much of a pullback is it from here up to here? Let's try to zoom in. From here up to here, we have this pullback. We're looking at an estimate. This is like a 40% pullback, 40 to 50%. We could try to pull in our Fibonacci's. As we pull our retracement from this level up to this level of structure, yeah, close to 60 to 61%, meaning we've even touched a 50%. Now remember where we started this initial move. We never had anywhere where sellers managed to come against buyers for over 50%. Since from this level of structure, we never had this massive push to the downside. Now this is the first sign of trouble. Sellers came in over 50%. From there, price action pushes up to the upside, and we have another pull to the downside. How much of a retracement is this? Let's see. From this level of structure to up here, wow, this is even over 61%. We're looking at a pullback of around 62 to 65%. Now this has to give us an idea. Okay, now sellers are kind of coming in aggressively in the market. Now they have a bit of power to push buyers to the downside. In this case, now we could start being a little bit conservative. If you're in the buying side, now you want to be more vigilant, because now at this point sellers are starting to gain momentum. Another thing that gives us a clue the sellers are gaining momentum is this wicks over here. Shows that buyers came in and pushed up, sellers came in and sucked price action back down. Another pattern repeated itself. Buyers came in up to this level of structure, back to where the wick of this candle is. Sellers came in back and sucked the market back down. Another candle we see. Buyers came in, pushed price action up, and sellers came in and sucked the market back down and even closed on the seller side. Now slowly but surely, and I think it's starting to become clear to everyone, if we kind of broke down this initial thing, we could see that at this point now sellers are starting to gain momentum. Plus, another concept that I prefer to look at it in forex is that once everyone's looking for a buy, because initially this buy started at this point where we started analyzing the market. If you're looking for a buying opportunity, this is where you should have supposed to join the buy. But if you missed the whole buy and you're still looking for a buy at this point of structure, it's kind of getting late. Now for this week, I'm initially looking for a selling opportunity, and I hope the way I broke it down gives you the reason why I am looking for a selling opportunity. Now the question will be, where? Okay, now I know that I'm looking to sell the market, but where exactly am I looking to sell the market? Remember what we said at this point. Something pushed sellers and gave the seller strength, and this was a resistance level. Now for me to be able to sell, I have to look for a resistance level. Now as you come into the daily, just to be able to see on the left hand side, as I look for my structure, my resistance, my nearest resistance, and as I push the market this up, this is where you find the resistance level. So meaning I'm looking to sell the market, but back at this level, because why? Look at it. We have aggressive sellers, we have more sellers, more sellers, more sellers. So as soon as price action comes up and touches this level, is so we have aggressive sellers in the market who are looking to knock the market back down. Now of course I'll be looking for confirmation tools that will help me validate my reason for taking this trade. And another tool that I like to use, now this is for the more advanced people who have been with us, it's an ABCD pattern. From A to B, if we copy and clone this move, we can see that we should have a termination at this level of structure. Now of course it's a zone, it's not a one line that I'll be looking for that line specific thing. We could try to grab this and just try to zone it out, just give it a zone. As soon as price action comes to this close zone, this is where we'll be considering taking the sell. Of course, there's going to be a lot of things like our RSI, our divergence, and all those other things that I used to have a lot of confirmation for, or a lot of scores for me to take my trade. But like I said, I'm looking for a certain opportunity. I've shown you the reasons, and I've added another ABCD pattern. Now I'll show you how I'll be looking, how this trade will look like if it plays out in our favor. So this is how the trade will look like. So we go short as soon as price enters our kill zone, somewhere this level of structure. This is where we would want to enter the market. Now how will I enter? That you have to stay posted on our social media platforms. No? Stop loss. Prefer to put my stop loss just a couple of pips above this kill zone. Around, what level is this? 151227. Now of course this is not exactly how we put on my stops, but just around those areas is where you could be focusing. And for my entry, I'm looking at 149064. No? And this will be where my entry will be at. Not exactly the level, but somewhere along those lines. And my first take profit will be back at this where we had this major consolidation, and this is already a favorable trade, as you can see. Now we're looking at the pound yen. This is a very volatile market, and for a short move we get a lot of pips, so very volatile pair. So already if you do get this trade, you're looking at a favorable ratio of 1:3. So for risking $1, you're gonna get $3. For risking $100, you're looking at $300 in profit. So whatever I'll be risking, I want to make 3 times that. So yeah, hope you enjoyed this video, and if I made it simple enough for you to comprehend, and you've been looking at our videos for a while but found it hard to understand what we were talking about, I really hope that this really kind of cleared some air. And if you want us to continue making videos like this that are easy to understand like this, please leave a comment or hit the like button to motivate us, to show us that this is what you like. And those will just be feedback for us to understand that this is what people like, and this is what we should continue doing. And if you really like our videos, make sure you subscribe to our channel. It's free, guys. You won't pay anything for subscribing. You just get free content that was still given out for free while it's still free. Take advantage that it's still free, because soon we want to make it for only our privileged few personal clients. But nonetheless, hope you enjoyed your weekend. Hope you enjoy the week ahead. But most importantly, hope you have a profitable week ahead. For me, your friends from FX Link.